So we did see some sell pressure across the board in the market yesterday. There was the SPY gapping above 257 following Friday's strength. We did we didn't quite get the gap fill. It was like a soft gap fill, kind of kicked down to about 256, which is the high over here. Now we have pretty good information because we have the sell pressure, second wave down, heavy volume till the end of the day, and we're drifting up this morning. And so, I mean, the key has always been that each time we see weaknesses, like that weakness intraday, it's been established that once you see selling in the morning, we've got a pretty good track record. If the morning low gets taken out, you get a nice second leg down. What we haven't seen in quite some time is step 2, step 3, etc. for a larger market pullback. So in the case of when you get a big day of selling like this and the market gaps up, that's great because what you can see is right on the open, does this fail? The sellers immediately come back in again. And if they do, that's
early release of Belgium's business.
So looking at this, the support here from the prior day, the support in the morning, which is where it broke and had a second leg, that's an interesting area right here. So if we get up into this area here, right on the opener in the pre-market, and then if we get hit, we get below 256.5, then you can start looking for some downside. That's kind of the way to approach it now. If we gap up here, we fail right here, we just have a little bit of a tick down, and then we're above the morning high, business as usual. IWM, the interesting thing to me about IWM and the buying on Friday didn't take out the high as the all-time high, unlike the SPYs. Remember, this one's really illiquid, so if buyers come in small caps with large dollar amounts, it just goes. So even with the strength in the overall markets on Friday, IWM did not make a new high. Similar pattern to SPY yesterday, sold in the morning, consolidated, made a new low. And we talked about, I think it was yesterday morning, the 149.40 that had been support for a couple of weeks before we cracked it. And the cool thing about that is we're right there now. Looks like yesterday we went above and below it to probably confuse some people. Below, above, but we never held back above 149.50 after dropping this prior support area here. So this morning, this is what we want to look at, is this little band right here. We failed to get above 149.50, and from there it's a little bit messy here. I guess the way I would look at it is, what does it do into 149? We fell in this area right here. We go back to a week ago, we bottomed below 148.5 from 148.30. And this had been my downside target area, somewhere between 148 and 148.30 for the $2.5 down move. All right, Caterpillar, wow. The numbers were just insanely good. Analysts, not even close to what the numbers were they reported. But we have a situation here where this thing has run a lot. So really good numbers, fundamentals, justified. The stock has been trending up strongly. It gapped up mid-September. I don't know if this was raised guides or whatever this was here, but this gapped up. Here's a prior earnings gap, gapped above 112, consolidated for a month, and then just had this big trend. So if we go back to prior to the last earnings, it was $108 stock. This morning it's $140. So it's a 30% move since last quarter. It's a lot. So I talk about this all the time. It's just a very common theme, which is if you get a stock that's run up a lot in the last 3 to 6 months, and it's not Netflix, even Netflix it could happen to, but if it's just a regular old economy type stock, a lot of those institutions that own it they really will look to sell because they think it's run so far so fast. And so not to say that in a year from now it can't be at higher prices, But a 30% move in 3 months for Caterpillar can bring in some profit takers. And it's a very large gap, so there's no natural spot for people really to buy. Again, when stocks like a stock like in Netflix or an Amazon gaps up, and there's that profit taking right, like in the pre-market or right in the open, momentum players will come in quickly. Just like when we saw Netflix bounce from 198 very quickly back up to 205 the day of earnings. It's a little bit different in terms of the people who are willing to buy a stock like Caterpillar and people who are willing to buy a stock like Netflix. And so that's why when you get profit taking in something like Caterpillar, say it does come to 138 right in the open and it pops a little bit. If it starts to continue lower, it can fill the gap because institutions that buy Caterpillar are momentum funds, and they don't want to bid, buy larger positions at prices above where it's ever traded before. But there will be institutions in Caterpillar who will be bidding down, below the prior high. So that's just a big picture reason for why these can behave differently after large run-ups, even with really good news, which Caterpillar did have really good news. They said sales were up across the board globally, with the strongest in North America. So maybe businesses are a little excited about potential tax cut, accelerated depreciation, etc. And also, I guess you get the hurricanes maybe added to, like, people needed to buy equipment for reconstruction, things like that. So global warming helping the construction industry. So we're looking at, this easily could do 10 million shares today, but even if it only does, 6 to 8, it's still going to be very liquid. So the initial high was put in the pre-market 42. What did I put on the sheet? 142, good. And it made a little bit of a lower high. So sellers are starting to take control a little bit. I think 140, the whole number divisible by 10, is a natural inflection for the open. If it's holding below, you can trade it on the short. The natural thing for me is to just look for a quick 2-point down move to 138 and then kind of see. You can see when it popped initially, it did pop up to 137.5, touched 136 before the next leg. So if they really want to do some major profit taking, that would be right there. And we've done almost 1 million shares in the pre-market, so this is good information. Lower high here, lower high. For me to really feel comfortable about this thing on the long side, it would be tough up this much. I'd want to see it very quickly, getting back up above 140.50, then eventually holding above 141. That's how I would look at it on the long side. Other than that, I'm happy to play it short, at least for, pulling to 138 or lower. IONS. So I chose this one rather than BIB. I thought it would be just a little bit easier to handle the risk. The spread would be narrower, but one of their drugs is sold by BIB for them. So it's down on whatever the number they reported there, but it's run up. It's another one that's run up a lot just into earnings, into Biogen's earnings. So this ran from 56 to 65, topped out at 65 the last couple of days. It's now below 60 in the pre-market. So this run was basically a nice shakeout here on this day, right? People came in, they broke the downside, came back up, and boom. And this is the worst, right? You're buying to the support, you get stopped out, you got to buy it back the next day or when it breaks out of the consolidation. Okay, so just going back to when it broke out from that consolidation, it closed above 56, 57, and the next day consolidated and then had a big move here from 58. So 58 is the first interesting spot in my view. I guess when I zoomed really closer, 57.50 became more apparent. That's why I put that on the sheet. So I guess when you get really granular closer in, but you should have an alert at 58 as well. This 57.50 is where it spent these couple of days right here when it broke out. So 57.5 to 58 is interesting. If it gets right back above 60 and starts holding above, there's no reason to think that it can't bounce that back up to here, 62 to 62.5, which was support from the prior couple of days. I would think this would motivate some people up here to getting the hell out, which might cause it to roll over again. So those are the prices. Next one is GM, which probably will be a little bit easier to trade than IONS. This is making a new all-time high. It's post-bankruptcy. And this is another one that's just from an old school company, has run, I think, a little bit too much too quickly. So it gapped up a couple weeks ago to 43. It is, and the way that you do this is you go back to September where it was a $35 stock. It's 46 this morning, 30% in a month. So it's a lot for a GM. That's why you would get profit taking in this situation potentially. The great thing about it is if there's profit taking too, you kind of have a consolidation range recently where you can use as levels to measure where people would be buying. So let's take a look. So it's already failed at 47 a few times. I don't know if we'll get that shot again, but say you're shorting, you notice in the pre-market it was failing 47, you short it, and you have these levels here. Not sure what I put on the sheet, but this 45.60 here is interesting. I did put that on the sheet, good. And then I put 46, which was, those are kind of the areas that say, okay, maybe people would have some bids in right here, or even possibly at the prior high. I don't think anyone on the desk is shorted right now that I can see. Certainly, nice trade. The volume's coming in. They're profit taking. First stop 46. You want to have alerts up here. Right on the open, it pops up. Let's say 46.80. This area right here would be where I'd be shorting it. Oh well. They're on the conference call right now. The next one is YNDX, which is I think the Google of Russia. The EPS reported number was really bad. But I think if they look at the market share numbers in terms of their search that grew, I think that's probably why it's okay. Here's the up channel that it's been in for a while. Couple years almost. So, I mean, clearly this 29.30. This 31.60, I put on the sheet, 31.70 to 32. 33. Probably more like 33.30. It was being sold coming into earnings, I guess. So a little bit of a downtrend. The reported number came out. People are like, "Whoa!" They hit it here, and then I guess the market, and then it bounced right back up. So if 31 is, yeah. So I think 31. As long as it's above 31, I wouldn't be too aggressive on the short side. Certainly a failure up here at 32.5 would be interesting. This had been support. And then it was resistance when it rallied back up. Couldn't get through there again, so I guess 32.40 to 32.50. I'm going to put that on the sheet, but I will add that. And this one's, it's pretty liquid when it's in play. I mean, when we report earnings. When it gapped up last quarter, it did 20 million shares, Jesus. So 300,000 shares so far in the pre-market. Looks like basically to me, people just kept on bidding at above 31 here, and have an alert at 31 and a quarter. This would be the area to be interested in buying it, probably against 30.80, stop below 30.80, and see if it can rally back up. STX. So STX, this one did pretty much what I expected yesterday, and I didn't really crush it at all. Shorted right on the open because I thought it was, we talked about in the morning meeting, a run from 38 to 40 would be nice. It already did it in the pre-market, so I figured I'd look for the failure at 40 for a move back to 38. And it was, like right on the open, it dropped quickly, and then it made a new high. That kind of was, the first signal. You can kind of see the wick here, and then the second down move. It held 40 at first, but it made the lower high. I tried to add to my short right here, but I didn't aggressively hit. I kind of, once it dropped, I think it was 85-cent bid or 80 or something like that, I threw up an offer at 95, which obviously didn't get taken and went straight down to 39. Covered into pre-market support, flipped it long, had a pretty nice long position, I think at a 38.05 average. But was really quick to sell it, and I think part of what my thought process was there was it. I didn't like that it came down here after 10 o'clock. Like if it done this move like right on the open at 9:45, I would have felt a lot more comfortable about it going through the high. And so I guess I did kind of have a legitimate reason to be a little bit careful there. But then as they were walking it up, I tried to short it. You maybe saw me a couple of times. I lost 10 cents. And I stopped. It was kind of silly because the pattern hadn't changed. But unless it goes like vertically right back up, you don't really want to short it. It was just very methodical. And it was accumulated the rest of the day. I guess we're at 39. So my thought process this year is like, why not be long it against like 38.90 right here if they're buying it? If it gets above 39.60, see what happens at the 40 area. But it's pretty bullish. I wouldn't say it extremely bullish, but pretty bullish. After this hard down move, they accumulated it the rest of the day. Certainly, if it's consolidating above 39.50 this morning, I'll pay attention to it. PETS. I thought they were really selling it all day, although it broke out of this little downtrend from the morning and never took out this 43.30 support. But it was sold, after trying to bounce here, it went right back down to the lows. But it did. The thing against it is it held, kind of held this. I had this, I guess, at the open, and I thought if it took that out, maybe it could go to 40. I guess this is the markup from the open and from the meeting yesterday. So it did hold this on the open and had a pretty good bounce. So maybe some people made money on that. Yeah, below 43.30, below 43, it's probably a short. If it's holding above 45, you would look at it on the long side. And then QURE, I put on here just as something I noticed the other day. I'd run up a lot on some acquisition of patents, I think. It was single digits, and then it kind of broke out from $12. It had kind of a pretty strong blow off top. They announced they're going to do a secondary. Just looking at where it's run from, this 12 to 20 here, I would think 15 to 16 is where at the most likely spots to price the secondary. So you could find it drifting down here. I put on the sheet, what was it, 19? Yeah, if it popped on the open to like up to this area right here, I'd probably short some, even against $20, really, just because it's likely, even if it doesn't get, the secondary doesn't get priced down here, I find it hard to believe they price it above 17.50. So it should come in closer to where they price the secondary over the next couple of days. So that's the thought on that. And it's a thinner stock, but it traded pretty cleanly yesterday on the down move.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.